If you are a US citizen living or planning to move to New Zealand, there are a number of important tax and investment issues that you need to understand to manage your financial affairs efficiently. In this video, I'll be covering the 10 essential investment considerations that US citizens need to know when relocating to New Zealand. Hi, I'm Jim Smith, Senior Financial Planner here at Pacific Wealth. We specialise in helping new migrants and returning Kiwis navigate the intricacies of cross-border financial planning to help you make the most of your new life in New Zealand. In this video, I'm going to walk you through 10 essential investment and retirement planning considerations that US citizens need to know. Now, if you thought that just because you're not living in the US anymore, you no longer have to file US tax returns, then unfortunately I have some bad news. The US is one of only a handful of countries to base its tax obligations on citizenship. This means if you are a US citizen or green card holder, no matter where you live in the world, you will need to continue to file your US tax returns. Now, unlike the US, New Zealand bases its tax obligations on residency. This means if you move to New Zealand, you'll be subject to both the US and New Zealand tax codes, and this is where many of the complexities arise from. The tax code in New Zealand is fortunately far simpler than the US. However, there are some important differences. Each person in New Zealand files individually, and any income from jointly held assets is attributed 50% to each individual owner. There is also no standard deduction or tax-free allowance, and all your income will be subject to tax. But in New Zealand, you'll be pleased to learn that there is no inheritance tax, no social security tax, no general capital gains tax, no state taxes, and no healthcare tax. But there are some important caveats. Whilst New Zealand has no general capital gains tax can apply in some instances, and there is a bright line test that applies for residential investment property. And whilst there's no state taxes, if you own a property in New Zealand, you will pay local council rates, which is broadly based on your property value. And whilst there's no healthcare tax, there is a very low level for New Zealand Accident Compensation Scheme, which is often referred to as ACC. So whilst New Zealand has a simpler tax code, it is where the US and New Zealand tax codes interact that creates the areas of complexity. Fortunately, the US and New Zealand have something called a double taxation agreement. This helps to determine the rules for which country gets to tax what, as well as to try and remove areas of double taxation. Under the US-New Zealand agreement, where tax is of a similar nature, you can attain a credit for the tax paid in one country and offset this against your tax liabilities in the other. But complexities often arise where the taxes in each country are not of a similar nature, in which case you can get something called double taxation. Now, income tax is an example of a tax in both countries that is of a similar nature, and as such it is usually possible to attain a credit for the income tax paid in one country and use this to offset against the tax paid in the other. But this is not true when it comes to US capital gains tax. New Zealand doesn't have a general capital gains tax system and levies something called foreign investment fund tax on overseas investments. Now, I won't go into the detail of the foreign investment fund tax rules in this video, but there are areas where foreign investment fund tax and US capital gains tax overlap. And as these taxes are of a different nature, you can incur double taxation. Now, good planning can help reduce the tax payable, but sometimes an element of double tax can be hard to avoid. The US passive foreign investment company tax rules are fourth on the list, but arguably one of the most important. These are a set of rules for taxing certain investments held outside of the US. The passive foreign investment company, or PFIC for short, tax rules are quite complicated, so we won't go into the detail here. But the original intent of the rules was to deter US citizens from sheltering offshore investments from US taxation. When living in the US, it is unlikely you would have heard about PFIC investments, but when you move overseas, you will come into contact with non-US fund structures that get caught by the PFIC rules, such as New Zealand Portfolio Investment Entities or PIs, and Australian unit trusts, sometimes referred to as AUTs. Investments that get caught by these PFIC rules can lead to additional tax compliance reporting as well as higher overall levels of tax for US citizens. It is therefore important for US citizens to select fund structures that are compliant with the US PFIC rules, such as directly held shares or bonds and US exchange traded funds. KiwiSaver is New Zealand's main savings scheme to accumulate funds for retirement. When you start work for a company or change jobs, you're normally automatically enrolled into KiwiSaver unless you choose to opt out. Now, it's not clear under US tax rules how KiwiSaver should be treated, and you should seek guidance from your tax advisor. But in many cases, the assets held in KiwiSaver can get caught by the US PFIC rules, which we discussed just earlier, and result in additional tax as well as ongoing tax reporting. The other issue for KiwiSaver is that in New Zealand, these are normally set up under a trust structure. Unfortunately, this can also trigger additional US reporting, as membership of a KiwiSaver can be considered interest in a foreign trust. KiwiSaver is therefore an area you need to understand before joining or becoming automatically enrolled, and you should seek guidance from your tax advisor. If you'd like to know more about KiwiSaver, we've created a separate video on KiwiSaver that you can find on our YouTube channel. Now, normally, US retirement accounts are considered as foreign superannuation schemes in New Zealand. This means that New Zealand doesn't tax the underlying assets held within the retirement accounts, but taxes the income or capital as it is withdrawn. Now, usually Roth IRA distributions are tax-free in the US, but New Zealand doesn't recognise Roth IRAs as being different from other retirement savings accounts, meaning that Roth IRA funds as they're withdrawn can be subject to tax in New Zealand. In addition to retirement accounts, the US also offers investors access to a number of other tax-privileged accounts. These accounts include investments such as College 529 accounts or investments referred to as UTMAs. Unfortunately, the tax-privileged nature of these accounts are not specifically recognised in New Zealand, meaning that both these types of accounts are normally subject to tax in New Zealand as ordinary taxable accounts. Now, there are some options that may get around this, such as to change the account owner to a family member still living in the US, but you should take personalised advice before making any changes. Issue number 8 is one that often takes US investors unawares. Unfortunately, most US retirement and brokerage account providers don't like dealing with clients that are residing overseas. Often, when you provide them with an overseas address or you access your account online from overseas, your US provider may impose restrictions on trading and managing your accounts. They could also force you to find another provider or withdraw your funds completely. As such, it is a good idea to discreetly check how your financial providers will manage this so that you can plan ahead. The good news is that there are US institutions out there who are comfortable serving US citizens living overseas. Now, I've mentioned double taxation agreements several times, but countries can also have another type of agreement referred to as a social security agreement or a totalisation agreement. These agreements address issues related to state pensions and social security benefits for individuals who have worked in both countries. This enables both countries to determine eligibility and calculate the benefits based upon periods of work or contributions made in each country. Whilst New Zealand has social security agreements with many countries, including Australia and the UK, it does not currently have a social security agreement with the US. This means if you are not paying US social security, time spent simply residing in New Zealand may not count towards your US social security entitlements. But whilst you may not be accruing any additional benefits, you can still benefit from the social security entitlements you've already built up and receive your US social security whilst living in New Zealand. We've created a separate video that goes into US Social Security in more detail, as well as the interaction between US Social Security and New Zealand Super. We're up to number 10, and I feel that so far all we've done is focus on the potential problems. So I wanted to end with some good news. New Zealand has a set of rules called Transitional Tax Residency, and if you qualify as a Transitional Tax Resident, you'll be exempt from having to pay tax in New Zealand on your foreign source passive income for the first 4 years. Now, we covered transitional tax residency rules in more detail in another video, but essentially you can be exempt from New Zealand tax on the likes of rental income from your overseas property, foreign dividends or interest on your foreign investments, as well as income from your foreign pension for the first 4 years of becoming tax resident in New Zealand. So that's our 10 essential investment and retirement planning issues that you need to know. Careful planning, as usual, is the key, and it can help you avoid fines or penalties, as well as ensuring you continue to manage your investments efficiently when you move to New Zealand. And as always with tax, what may start simple can get complicated very quickly. As such, I would strongly encourage you to seek professional tax advice at your earliest convenience, and ideally before you move to New Zealand. Thank you for watching. If you are interested to know more, we've created other videos specifically for US citizens that you can explore on our YouTube channel. You can also visit our website www.pacificwealth.co.nz, and if you have any questions, please feel free to reach out to myself or a member of the team. Thank you for watching.